Hello. So let's begin, guys. I trade smart money concept, SMC, and ICT. I trade break of structure. I trade many things. Okay, but it depends on what the market shows me. That will determine what I will use to trade. So today I'm going to show a breakdown of the trade that I took this week. So let's begin, guys. All right. So first of all, this is a trade that I took this week. I trade smart money concept, SMC, and ICT. I trade break of structure. I trade many things. Okay, but it depends on what the market shows me. That will determine what I will use to trade. So today I'm going to show a breakdown of the trade that I took this week. So this is dollar index, as you can see from here, and this is Euro USD, and this is USD CHF. These are the three pairs that I traded this week. So let's begin, guys. All right. So first of all, this is a trade that I took this week. I trade on the concept, SMC, and ICT. Structure and trade many things. Okay? But it depends on what the market shows me. That will determine what I will use. So today I'm going to show a breakdown trade that I do this week. So this is dollar index, as you can see from here, and this is Euro USD, and this is USD CHF. These are the three pairs that I traded this week. First of all, this is a trade that I took this week. Okay, so let's begin. Let's begin. Normally, every day, first thing that I usually do is to analyze what dollar index is doing, because whatever dollar is doing, it always tells me exactly what I will do in other pairs that are paired to it. So once I know the direction of the market from dollar and exactly what dollar is going to do for the week, then every other thing is always easy for me to identify in the market. So let's first of all look at dollar index and see what really happened in dollar. So this is DXY. Let's start from daily time frame. Now this is exactly what DXY looks like in daily time frame. So looking at this, you can see that dollar is in an uptrend. Okay, looking at this, you can see that dollar is in an uptrend, and this candle, this was NFP, which happened yesterday, and this was Thursday, this was Wednesday, this was Tuesday, and this was Monday. Now, let's quickly look at what really happened. Now, if you look at the last candle that was formed on previous week, that is 2 weeks ago, this last candle was formed on Friday. So it closed in this form like a doji candle. A little bit lagging on internet. So going back to what I was showing you on dollar index, this is how dollar index looks like. Let me quickly show you what I mean. Now, I will draw this to show you the direction of the market. So this is the direction of the market. Okay? If you look at this, you can see that the market is obviously in an uptrend, creating higher high and higher lows. So now we're not going to concentrate on that. We are only going to concentrate on what happened this week because we want to do a kind of recap of what really happened this week and how we took the opportunities that we had this week to be able to be in the market. So, as I was saying, the market at this particular point was ranging. So, when market broke this particular trend line that you are seeing here and moved up to this particular point, you notice that there were a series of ranging markets that formed here. Okay, so this particular, if you look at this point, you can see the rejections that were happening at this particular point. Okay, the bodies of all these candles close inside this particular range that you are seeing. The bodies closed inside this particular range. Okay, and then if you look at this part, you can see that all the bodies of the candle close inside this particular range, apart from this particular candle that was formed on Friday last week, not this week that just finished, the previous week. So this particular candle that formed, this particular bearish candle that formed previous week broke this particular range downside. You understand? So when this particular candle broke this particular range downside and took out all the liquidity that was lying here, all the sell side liquidity that was lying here, then the next thing that I was expecting this particular week was a bullish movement from dollar. I expected dollar to be bullish this particular week that just ended. So that was my bias for dollar. So on Monday, this particular candle, this particular bullish candle formed. On Tuesday, on Thursday, we finally broke this particular range. Now, there is one thing that I want you to take note of here. Look at this candle that formed on Wednesday. It closed, the body of the candle closed above the range. So when the body of the candle closed above the range, this is a clear indication that the market has broken structure. And the next thing you have to be looking for is a bullish movement because the market wants to go up the more. So now I'm going to go down to 4 hours time frame to show you exactly what happened and how I took opportunities with this particular strategy. So going down to 4 hours time frame, this is what we have in 4 hours time frame. Now this is that candle. This is a Friday, the previous week before this particular week that just closed. So this is that Friday candle that created that week that broke this particular ranging market. All right, you can see. So when it happened, look at this particular long bearish candle that broke this range. Now, when the market traded on Monday, that is this week that we are, when the market traded above it, then that is a clear indication that the market has changed structure and you should be looking for opportunities for buying. You understand? So I'm going to show you something here. Now, look at this particular point in the market just above. This particular long bearish candle that broke this range is an order block. Okay, now I want you to look at how the market on Monday traded above it, okay, and closed at this particular point. Okay, the market wanted to push higher. The buyers wanted to push the market higher, but the sellers in the market couldn't allow it, and they pushed the market up to this point. So the candle closed in this form with this long wick. So the following day, which is Tuesday, now look at what happened on Tuesday. Market returned into that particular order block, because this particular order block, this bearish order block here that's formed, that was what created this impulsive movement that first moved on Monday. Now, so when the market returned just above it, this is a clear point to take a trade. And that is exactly what I did this week. I took two trades. First one was on USD CHF, and the second one is on Euro USD. And I'm going to show you how I was able to take those trades. Let's first of all go to Euro USD. Now this is Euro USD. Euro USD always do exactly opposite of what dollar index is doing. So whatever DXY is doing, you should just do exactly opposite it on Euro USD, and it will give you the same exact result. Now look at Euro USD. At this particular point too, you could notice that Euro USD has also been ranging just like dollar. So what happened? First, that particular candle on Friday that broke Euro USD downward, that broke dollar index downward, the same movement broke Euro USD. The same movement broke Euro USD upwards, as you can see. Now, look at this particular bullish candle that broke this particular structure, that broke this range. Now, when market traded back on Monday and took out this particular high that you can see here. So this is a break of structure. This is another break of structure here. So this is another break of structure here. So when the market traded above this particular break of structure and finally closed at this point on Monday, then on Tuesday, I already know what I'm expecting from the market, because dollar has already showed me that dollar is going to be bullish. And then everything that dollar does, I will always do opposite of it, as I already told you, in Euro USD. So because of that, I have to be looking for bearish movement on Tuesday. So, and that is exactly this particular trade that you are seeing here. I took this trade on Tuesday, okay, and I closed it on Wednesday. What happened? On Tuesday, market traded back into this particular order block. This last bullish candle that was formed before this movement. Okay, when market trade into it, I just took the opportunity in 15 minutes time frame. I'm going to show you in 15 minutes time frame how I was able to take the trade during New York session. So I entered the trade and boom, I took my profit at this particular point. Now what happened? My weekly bias this particular week that just finished was bearish movement. So after Tuesday, on Wednesday, the market continued up to this particular point on Wednesday. And then on Thursday, what happened on Thursday? The market returned back into this particular fair value gap that was created here. If you look at this point, you can see a fair value gap. Now, from this point up to this point was a fair value gap. That is first thing. And also, looking at this particular bullish candle, the last bullish candle that was formed before this movement on Tuesday and Wednesday, that is the order block. Now, you already know that the market is bearish. So, the next thing you need to expect is for the market to return on that particular order block. Now, there is two conference here. There is an order block and there is a fair value gap. So when market returned into it and created this rejection, as you can see, this rejection that was created by this candle, that is another time to take the trade and make this particular small movement. But if you didn't catch it, on Friday, which was NFP, this particular NFP, if you go to my channel, on my story, you will see that I took this trade yesterday. This particular trade, I took it yesterday and closed somewhere here. And I didn't even stay up to the end of it. So what happened? First, market traded into this particular order block, this last order block, this bullish candle that was formed before this movement. When the market returned into it, I took the trade, and that is how it ended. But I'm going to show you exactly how you can take trade, okay, from hourly time frame. If you're a day trader, this is what you need to do. And this is what I do all the time. If you're a day trader, first thing you need to do is to confirm the direction of the market from daily time frame. Once you confirm the direction of the market from daily time frame, and also know your weekly bias, what you are expecting from the week, then the next thing is to go to hourly time frame and then use other blocks created in hourly time frame to enter trades. Now I'm going to show you how you can do that. It is very easy. Now let's go to hourly time frame and I'll show you exactly what I mean by that. Now this is hourly time frame. So all these trades that I took, this is how you would have done it in a very simple way as a day trader. So come to hourly time frame. First of all, the market was trading here on Friday. This is where the market closed on Friday. All right. Then this particular bullish candle that you are seeing here was the last bullish candle that was created before this movement that happened like this. So what does it tell you? This particular bullish candle is the order block. So you expect the market to trade back into that particular bullish candle and then you take a trade. I want you to look at this particular inverted hammer candle that was formed here. It is more like gravestone, not really inverted hammer. This particular small doji candle that's formed here. If you look at it, that particular candle came on top of this particular bullish candle that I'm telling you that is the order block. When it came on it, you see rejection from it. Now, when you saw this rejection, it's showing you that the buyers in the market are losing strength. Okay, and the next thing is that the sellers are coming into the market. So this is exactly where you would have taken the trade up to this particular point. And then this particular small candle that is formed here will become the next order block because it is the last bullish candle that was formed before this particular movement. So when the market traded back into it, it is a sign or it is a confirmation for you to enter another trade for bearish movement, targeting this particular level to be taken out. And the next take profit is at this particular order block here. Why do I consider this an order block? This is the last bearish candle that was formed before this particular movement. Okay? This particular movement up to this point, the last bearish candle that was formed is this particular one. So because of that, this is exactly where you should set your take profit. You shouldn't go beyond that, because if you go beyond that, you wouldn't have gotten the opportunity. The market would have come back, maybe take you out at stop even or somewhere. So after that, what's happened next? If you look at this particular point, what do you think is the order block at this particular point? Just think about it, maybe for a few minutes, and then I will explain. Looking at this particular point. Okay, if you agree with me, you will know that this particular order block that you are seeing here, this particular bullish candle that you are seeing here is the order block, because this is the last bullish candle that was formed before this movement that came up to this point. So because this is the last bullish candle, you are expecting the market to trade back into it, and you have to wait for rejections around it. Once you see rejections around it and everything tallies within a particular time, normally in New York session, morning session of New York session, between 7 o'clock to maybe 10:30 in the morning, you should take the trade. You don't need to think much about it. You need to take the trade. And that is exactly what I did to take this particular trade. As I was telling you that I took it on Tuesday. So when market returned into this particular order block on Tuesday, it is a perfect confirmation for me. So I had to take the trade. I took this trade on Tuesday and closed it here, exactly here. Okay, so then let's go forward on how I took the trade on Friday. This particular uh, NFP movement that happened on Friday. That is exactly the same thing that I did on Friday. So now look at it. If you look at this particular small range that happened here, if I take you to 4 hours time frame, you notice that this particular candle, 1, 2, 3, 4, this particular 1, 2, 3, 4 candles are bullish candles, okay, in 4 hours time frame, and that is the last bullish candle in 4 hours time frame that was formed before this downward movement. What does it tell you? This is the order block we are looking for. So just wait for the market to return into it. If the market returns into it and respect it, that is exactly where you need to take your trade. You don't need to think much about it. And that is exactly what I did. Now, notice what happened. When the market returned on Thursday, market returned here. Look at this. You see this tweezer candle pattern that was formed here. It is respecting this particular order block that you see here, because when the market traded up to this point, it got rejected and then tried to push up again and got rejected again, and the BS were able to control the market. So what happened? It sold. Now, it traded into this particular order block and stopped. Then on Friday, that was yesterday, on Friday, yesterday, what happened? Market, first of all, because any day, if you know about candle, the accumulation, manipulation, and distribution, when you know the direction of the market, the first thing you expect when the candle opens every day is the accumulation of that particular candle. So after the accumulation of the candle, the next thing is to expect the manipulation of that candle. Then during the manipulation, that is exactly where you take the position and then go for the distribution of the candle. And that is exactly what I did at this particular point. And that is how I trade all the time. Now, look at this. What do you think is the order block at this particular point? I want you to think about it. Now, if you agree with me, you will know that this particular bullish candle is the last bullish candle that was formed before this movement, which is the order block, which makes it the order block. Okay, and now because I'm expecting a bearish movement on Friday, I expected this is the accumulation. Let me just show you something. You see this? This is the accumulation that happened on Friday. Okay, this is Asia session. All these things that you see here is the Asia session. Now, at 2 o'clock, look at the time. At the 2 o'clock London time, the manipulation happens. Now, normally, manipulation of candle always happen in New York session. Sorry, manipulation of the candle, I mean to say, always happen in London session. You need to be careful about London session because London session is where many traders make a mistake and lose money. Because that's your perfect entry that you are seeing very early in the morning in the London session can be destroyed by that manipulation. So it is always good to know your daily bias. First, you need to know your weekly bias. After that, you need to know your daily bias. So once you know your daily bias, the next thing is to wait for the manipulation to happen and then you enter in the direction that you believe it will go on that particular day. And that is what I did here. On Friday, I expected a bearish movement on Euro USD. Secondly, from Monday, I already know that this week that just finished, I was expecting a bearish weekly candle from it. So that is the first one. So knowing your weekly bias, will tell you what kind of trades that will be, what you should be looking at for during the week. Let me make it very simple. First thing you need to do every week before you enter a trade, every week, you must try to understand your weekly bias. Know the kind of candle you are expecting for the week, the direction of the market, what you're expecting from the week. Do analysis from weekly time frame and know the kind of candle that you are expecting that week. This will help you a lot. Then when you confirm your weekly bias and the market starts respecting your bias, then your mind should be set in taking opportunities towards that particular direction for the week. So let's say, for example, you are expecting a bullish movement. you're expecting a bullish movement, a bullish candle from weekly time frame on Monday. Every opportunities you should be looking for in that particular week is bullish opportunities, a way to enter a bullish movement. Once the market starts respecting that your bias from Monday, Tuesday, then Wednesday, Thursday, Friday, you should be looking in that direction that you predicted it to be. This will save you a lot in order not to trade against the trend or against yourself. So now, after this manipulation, during the London session, so after this accumulation, after this accumulation, during the London session, the manipulation happened. Now, when the market traded into this particular point, this order block, it respected the order block. Now, if you look at these rejections that were happening, that is a sign that the buyers don't want to continue the movement upwards to take out this high and this high. Okay? So the bears, the sellers in the market, are becoming stronger and they are coming in much at this particular point. So during the New York session, when the news was released for NFP, boom, it happened. Very simple. I took this trade at this particular point. Just check my channel, and you will see on my story this particular trade. And that is exactly how I got the opportunity. Very simple and easy. So if you trade this way, know your weekly buyers and know your daily buyers, I promise you your trading experience will be very different. Your trading experience will be very different. Now let me show you the second instruments that I traded this week that just completed. I traded USD CHF. Now this is USD CHF. First of all, I will go to daily time frame. And from daily time frame, this is where you confirm your bias for the week. This is where you confirm your bias from the week. Now, whatever dollar index, whatever dollar is doing, USD CHF does exactly the same thing. If your DXY is bullish, USD CHF will exactly be bullish, because USD is the main currency in that particular pair, which means it controls the pair. If it is strong, that particular pair will also be strong. If it is weak, that particular pair will be weak, because it is the base currency. But if you look at Euro USD, in Euro USD, the base currency in Euro USD is Euro. So that's why if DXY is strong, Euro is going to be weak. And if you are expecting a bullish movement from dollar, the next thing you should expect from Euro USD or any other pairs that has dollar as its second quote currency, then you should be expecting selling in that particular point. So that is exactly what happened here. Now, first thing, USD CHF is in an uptrend. That is the first confirmation. It is in an uptrend. And then, secondly, I am expecting this week I was expecting a bullish movement from USD CHF. So my bullish bias for this particular currency pair is sorry, my weekly bias for this particular currency pair is bullish, a bullish candle. So how did I confirm that? Let me a little bit expand what we have here. Now, looking at this particular point, you can see this is a falling wedge. First of all, this is a falling wedge, and within this falling wedge, this particular bearish candle was formed. The next candle that was formed after it is a doji candle. Now, this doji candle that was formed is telling you an indecision in the market. Now look at this particular bearish candle that was formed before the doji candle. The body of the candle was completely closed. The candle closed without leaving a wick after it. This is showing you that the sellers were very strong in the market and wanted to continue pushing the market downwards. And then this doji candle formed. When this doji candle formed, it is showing you an indecision in the market. So once you see this doji candle in this form, you don't need to rush into taking another sell at this point. You don't need to take sell at this point because the market is already telling you indecision. You need to be calm. Then the next day, because this is a daily chart, so each candle here is formed in a day. So the next day, this particular candle was formed. This particular bullish candle was formed above this wedge. What happened? The bulls were able to trade above this doji candle and the body of the candle closed above it. So when this happens, you don't need to think a lot. You don't need to start thinking that this market will continue going down. It can't continue going down because the indication is there that the market wants to change direction, and the place you should be targeting your take profit is exactly at this particular order block here. Why is this an order block? This is the last bullish candle that was formed before this movement that traded up to this point. So it is an order block. Now, what do you expect? When the market trade, when you enter this trade at this particular point, you should be expecting taking your profit at that particular order block. You shouldn't go more than that. I took this trade uh last I think last 3 weeks. Yeah, I took this trade. Now, when the market traded at this particular point, you notice rejections from it. And then it returned. Now, let's come back to this week, how I took this trade this week, because that is what we are trying to recap. But I just want you to understand why this particular doji candle is going to be considered an order block, because it is the last bearish candle that was formed before this movement up to this point. So there are two confirmations. Okay, there are two confirmations that happened here, two conference. On Friday, that is last 2 weeks, this bearish candle that you are seeing here closed on top of this doji candle, which is an order block. Look at it. You see that it touched it and then closed above it. That is the first indication that market has traded into the order block. First indication, that is first confirmation. The second confirmation is that this trend line for this upward movement, that this candle that formed on Friday just touched it and rejected it. That is second confirmation from me. So when I saw this at the beginning of this week, I already know that this particular week that just concluded right now is going to be bullish. So what did I do? Going down to 4 hours time frame, let me show you what I did. Now this is 4 hours time frame. Now this is 4 hours time frame. I want to show you some mistakes that many traders make. Some mistakes. Now, if you look at this particular point, this higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low that's formed here. This shows you that the market is in an uptrend. Okay, well, when the market reached at this particular point and you saw these rejections that were happening here, you may be tempted to enter this as a bullish movement, okay, to continue to take out this particular high. But if you had entered a bullish movement at this point, setting your take profit at this particular point, you would have lost the trade, because there is still an unconcluded business that the market needs to do at this particular point. So that is exactly what happened. So when the market traded, when this long wick, sorry, not wick, when this long candle, bullish candle, oh God, bullish candle, bearish candle, when this long bearish candle was formed, okay, the market came at this particular point, was creating rejections around this order block, because this is the last bearish candle that was formed before this movement. So we have series of rejections around this point. So if you notice, it happened on Thursday. Those rejections happened on Thursday. All right. So what happened towards New York session? The market traded up and touched this particular order block here and rejected it with this grave candle. See this grave candle that formed here? It created another pattern. Look at this pattern. This bullish candle, this grave candle, and this bearish candle that formed here formed a shooting star. And what does the shooting star shows you? The shooting star shows a reversion pattern. Shooting star is a reversion pattern that happens when the market is in a bullish direction and it gets rejected and decides to come down. So let me show you another sign that was a rejection. Now look at this. So what does this tell you? When the market traded, just it was creating high, 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 low, high, high up to this point. Then at this point, it created it broke the structure, okay, but was creating a lot of rejections, and then traded into it again. Then created this grave candle that's formed here, okay. When this grave candle was created, it happened exactly at London morning time. It is a clear indication that this is the manipulation. This is the manipulation for that particular day. So it shows you that the market wants to continue going down after break of this particular structure here. So entering at this particular point to continue going up would have been a mistake. You would have lost if you do such a thing. So what happened? It went down, take out to this particular liquidity here and traded to this point. So now let me remove this so that everything will be clear. We won't have a lot of lines. So when market returned at this particular point, it created equal lows, and these equal lows formed liquidity. Below these equal lows is the order block, that doji candle from daily time frame. The order block. So that is exactly where you'll be waiting for the market to tap in for you to continue going upwards. Exactly what happened. So market at this point, when it hit here and created equal lows, okay, first it broke, it took out this low that you are seeing here, because this particular candle here, this is a wick. Okay, so and what came down to it is a full body candle. Okay, and then after that, you see this bullish candle that formed. This is engulfment. This is engulfment. So everything in trading works together. That's why when many people ask me, what do you trade? Like, what method do you trade? Do you trade other blocks? Do you trade SMC? Do you trade fair value gap? All these are instruments. All these are like what you need to know to be able to trade the market. There is no particular one that you should be waiting for all the time. Like in the market, as a trader, you don't just come out in the market and say, I'm waiting for order block or I'm waiting for a fair value gap. You need to have enough knowledge of the market to be able to trade. You need to have enough knowledge of the market to be able to trade like a professional. What do I mean by that? If you are just waiting for order block, okay, you may not have been able to take this particular trade. You may be taking that when the markets tap into here, that this is a change of structure, and when markets tap into this particular fair value gap here, then it is going to continue going downwards. You would have lost. Yes, you would have lost because you were not able to notice that the candle pattern that is formed here is a sign that the market has changed direction. Now look at this bearish candle. This small bearish candle that's formed here was entirely closed by this bullish candle. What kind of pattern is that? This is bullish engulfing. And what does bullish engulfing tell you? Bullish engulfing shows that the market wants to change direction and go in bullish, like go bullish direction, that you want to go up. So that is when this forms, and this small bearish candle from this small bearish candle that formed here is just a sign that's showing you that you need to enter the market. So the next thing is to take your profit at this particular order block when you took it out. And then what happened on Friday? On Friday, the market traded into this zone, tapping into that doji candle from daily time frame, which is the order block. So I want to show you something really quick from here. I want to show you something really quick. As a trader, you must be able to look at candles closely, because Candles are very powerful in the market. So when people draw lines, like perfect lines, draw perfect things on their chart, order blocks, fair value gap, and all sorts of things. This is not the key things you need to be looking at for as a trader. The key things that you need to be looking at for as a trader is what the candles are doing. Because candles, they tell you story of what the buyers and the sellers are doing at the market. So if you are able to read the candle and understand what the story it is trying to tell you, the information is trying to give you, you not that you will not make mistake in the market, but the mistake that you make in the market will be limited. Now, let me show you something how that happened. Now, when market when market returned here, this particular point is take out of liquidity. There's a liquidity line here. Market took it out, and then this particular flag was created. If you go to daily time frame, this small if you go to hourly time frame, sorry, this small range that's formed here is a flag. Okay, and this is continuation of that flag. Now, if you look at this particular point, this happened on Friday. This happened on Friday. Now, the key things that I want you to look at is what happened when market tapped into that doji candle that was formed on daily time frame. That this doji candle that was formed here on daily time frame. If you go to daily time frame, there's a doji candle that was formed here, which is another block. When market tapped into it, it had a rejection. Now, pay close attention. Pay close attention to this. This bearish candle, that was formed before this doji candle. Look at how it opened and closed. It has no wick, which shows you that the sellers are very serious in the market. They are pushing very hard to continue pushing the market downwards. And then doji candle formed after it. What does this tell you? This doji candle that was formed after it is telling you to be conscious. Don't rush to enter the market again. It is always important as a trader to wait for candles to close at some point in the market, like sometime. Let me give you time range where you need to be careful in the market. Around 7 a.m. 7 a.m. to 10 a.m. London session. Be careful of the candles that are forming at this point and always allow candles to close before you take a trade. And then between New York session, between 7 o'clock New York session and 10:30 New York session, also be careful how you react to candles forming at this particular point. And then the New York afternoon. Now let me explain. If you had rushed to enter the market at this particular point, thinking that the market will continue going down, you would have lost. What happened? The market closed as a doji. What does doji candle tells you? Doji candle is trying to tell you that there is an indecision in the market. The buyers and the sellers can't make a perfect decision at that particular moment where the candle will continue its movement. And that doji happened at an order block. It is a sign. You don't need to rush. You have to wait. Then wait for the next candle to finish. Now, if you look at the next candle that's formed, it is more like a spinning candle. Now, this candle, the sellers wanted also to keep pushing the price down, but the buyers in the market couldn't allow it, and it's also closed with a small body and long wicks up and down. This is a clear indication that the sellers in that part, the sellers at that particular point are becoming very weak, and you should be looking for a bullish movement. The market is about to reverse. Now what happened on Monday this week? This week that just concluded, that we just finished on Monday, I took this trade. And it run up to this particular point. I take the profit. This last one that happened was the NFP. Now, what happened? What happened? On Monday, let me go to hourly time frame. On hourly time frame, this is what we have in hourly time frame. Here, this is hourly time frame. So all those things that happened in 4 hours time frame, all those things that happened in 4 hour time frame that I explained to you, the doji candle and the next one that happened to it, this is it. Now, there is something that was created here. Okay? And then market broke this particular structure. Market opened at this point. If you look in between, let me expand this so that you see in between lines. If you look in between, you can see volume imbalance. There is a volume imbalance here. Okay, that was created because market opened at this particular point and created this volume imbalance, and then it moved up immediately and took out this particular high, that is break of structure, up to this point. This is another block from daily time, from 4 hours frame. It stopped at it. Then what happened? It returned. I said this. There is a video on my channel where I explained this before I took the trade. First, this is a fair value gap between here and at this point. Is a fair value gap. Okay, and then this volume imbalance. I was expecting the market to return at this particular fair value gap to take the trade. But had it been that the market didn't respect this particular fair value gap, the next place I expected it to come is this volume imbalance. And near this volume imbalance, you can see an order block. You can see. So when the market on Monday traded into this fair value gap, now at what time did it happen? At what time did it happen? Because time is very important. The manipulation happened exactly at 7 o'clock London time. 7 o'clock London time. If you look at this, I'm using New York time. That is why New York time, 2 o'clock New York time is 7 o'clock London time. So in New York, at 7 o'clock, this bearish candle touched this fair value gap. I took the trade immediately. If you go to my channel, go to my stories, you will see this particular trade. I entered it and boom, targeting this particular order block or this particular one, because close to this other block there is a fair value gap. You understand? So because this is hourly time frame, in a 4 hours time frame, it is clearer at that particular point, in that particular point. So this is exactly where you would have taken the trade and take all these profits. You see? Then after that, what is the next thing? Now, as a trader, I already told you, it is not all the time you don't only trade order blocks. You don't like say there is no order block, there is no fair value gap, and you forget everything about support and resistance. Now, if you look at this particular point, when this market is going down, this point, this is a support zone. Okay? At this point, it was resistance. Now it will turn to support zone. Let me draw it. Wait. Now, when the market on Tuesday, this is Monday, the market traded this way on Tuesday. Now, on Monday. On Tuesday, the next thing you need to expect is you wait for the manipulation to happen. Wait for the manipulation to happen. How does that happen? First, I already explained this, but maybe for those that are still joining us right now, maybe they didn't hear it. If you know your weekly bias, if you know your weekly bias, the direction that you are expecting the market to go for the week, and from Monday, market starts respecting that your weekly bias, then every other thing that you need to do that particular week should follow that weekly bias. That is how to know your daily bias very easy. My weekly bias for this USD CHF, my weekly bias was bearish, no, sorry, bullish movement. I was expecting a bullish movement from this particular candle, a bullish candle from weekly time frame. So because of this, every day, like Tuesday, Wednesday, Thursday, I expect the market to first of all create a to create the low of the candle and then move up to create a bullish candle. So because of that, I expect my accumulation to happen. After my accumulation, I expect the manipulation to happen during London. And after the manipulation during London, that is when I enter the trade and go the direction for the distribution of the candle. And that is exactly what I did. Let me a minute. So that is exactly what I did. Now, look at this point. On Tuesday, market opened here. Market opened here on Tuesday. If you look at this movement, these small candles that are forming here, this is the accumulation. This is the accumulation that was forming. Okay, the accumulation happened at this point. Let me mark the accumulation with this. This is the accumulation. So after this accumulation, what happened? If you look at this particular bearish candle that moved to this support line, it happened exactly at 7 o'clock London time. That's why I always say, if you know the direction of the market and you know your daily bias, London is when the manipulation happens. Wait for the manipulation to happen in London. Whatever happens in London, take the trade in opposite direction of it if it is in your direction, if it is according to your bias. So when that manipulation happened on London time, this is where you would have taken the trade, the next trade after the manipulation, because this is accumulation, manipulation, The manipulation happened exactly at London time 7 o'clock, between 7 o'clock to 10:30. That is a good time range. And also, there is a support level that it is trading on. This is your conferences. Okay. The next thing is to take the trade and place your stop loss just below here. And you would have gotten this particular movement. This particular movement that happened. Okay. On Wednesday, the same thing happened on Wednesday. On Wednesday, market opened here. On Wednesday, first of all, moved down, and then at this particular point. But on Wednesday, the right time you would have traded it is New York session. New York session. Because in New York session, this is exactly 7 o'clock New York session. If you look at the time below, you can see that this is 7 o'clock New York session. This is exactly where you would have taken the trade, because during the London time, the market moved up during the London time, and you are expecting the candle to be bullish. That is your weekly expectation. So when the market returned, look at this level. Let me just show you. This is small details that you need to take into consideration when you are trading. Look at this. You see? You see? Market respected it. So it just returned on it exactly 7 o'clock New York session. A sniper entry. You just need to enter it and place your stop loss just below it. And then you will have gotten this opportunity up to this point. I took this trade on Wednesday. Okay, now, when you know your weekly bias, you need to be careful. When you know your weekly bias, market will not continue bullish throughout the week. One day out of these 5 days, the market is going to make a correction. Because when the price is moving up, there will be a correction for it to continue. And you must know, it may happen on Thursday, it may happen on Wednesday. How you know when you expect the correction depends on how the market was moving starting from Monday. If on Monday, market moves very fast and meets a key zone, then expect this retracement or the correction to happen between Wednesday or Thursday. So it depends on how the market is moving. So if you look at it, this key level, let me minimize this so that you see this key level. You see it? You see this level? This key level. When the market traded into this key level, you shouldn't be expecting to continue going up, because trading is not only about strategies and drawing of lines. It also works with instinct and experience. So when market hits this particular level, you don't just, and it is already Thursday of the week, you don't just expect it to keep moving like that. Okay, you will expect a correction of that particular movement for the week, and then after that correction, the next day after it, you need to continue in that particular direction. And that is exactly what you need to do here. Let me show you what happened on Thursday. Market closed here on Wednesday. Sorry if I'm pronouncing some things in the wrong way. So on Thursday, market closed at this particular point and then opened here on Thursday and traded up to this particular order block here. You see it? This particular order block here. It respected the order block and returned back into this particular one, this particular order block. Now, on Thursday, your expectation on Thursday, if I didn't trade on Thursday, to be honest, I didn't trade on this Thursday because on Thursday, when this market traded up to this point, I know there will be a correction and I'm not expecting the market to continue going up. So I don't have any decision to make. I just kept quiet and watched the market trade and see, let it give me a sign of the next thing to do. So market returned at this point and then moved up to this particular resistance level. This level is now a resistance level, which will now be a support level. Okay, and then finally the market closed like this on Thursday. Now, if you look at the way the market closed on Thursday, you will see that from here downwards is a week in daily time frame. From this point downwards is a week from daily time frame, which means from here to here is the body of the candle. Let me show you. Let me mark it off. I will mark this point. You see this point up to this point? You see it? Let me change it to maybe yellow. Okay, let me change it to yellow now. From this point up to this point, this particular bearish candle that pushed down up to this support level and then return to it is a week from daily time frame. This is a strong signal. It's a strong signal that showing you that the sellers wanted to push it down, but the buyers said no and they returned it and created that wick. Let me go back to daily time frame and show you that from here to here is a wick from daily time frame. Now, this is Thursday. This is Friday. This is Thursday candle. Okay, this is Thursday candle. You can see that this is that line that I drew. This is the week. Now, this week, what does it tell you? This week is telling you, is giving you a rejection. It's telling you that the sellers are weak in the market and the buyers are strong. Okay, is a rejection telling you that the market will continue uptrend. So in 4 hours time frame, let's see how it looks like in 4 hours time frame. This is it in 4 hours time frame. Okay, this is how it looks like in 4 hours time frame, but it is more obvious in daily time frame. Okay, so let's quickly go back to hourly time frame. Now this is 1 hour time frame. Let's continue. Now on Friday, which was yesterday, NFP. Now this candle you are seeing here, this bearish candle you are seeing here that moved very fast is another block. Okay, and this, because of this rejection that happened, the next thing you should be expecting from the market the following day is continuation of bullish movement. That is the next thing you should be expecting from the market, continuation of bullish movement. So as usual, you look for your accumulation to happen. Check out the manipulation and enter the distribution of the candle. Now Where is the accumulation? This is the accumulation because market opened here up to this point. This is the accumulation. Now, after this accumulation, then in the New York in the London session, that's why I always tell you, London session, you should be very careful about London session. London session can destroy all your plans. It can destroy your trades. In fact, for me, I always advise traders, once the manipulation does not happen in London session, don't trade London session. Wait till New York session before you trade. Now, look at this. After this accumulation, at 7 o'clock, exactly 7 o'clock London time, this movement happened. This bearish movement happened. When this bearish movement happened, many people, many traders will be forced to enter a bearish movement, thinking that the market will continue going down. And this is where many people lose. Many people just lose money for no reason. Now, many people will think, oh, this is liquidity. Okay, many people will think this is liquidity and the market has created this movement. It is bearish and they will enter a shorting position, thinking that they will trade into this particular order block. You understand? That first of all, market will take out this liquidity and trade into this particular order block. But it didn't happen. It didn't happen because this is the accumulation. And secondly, the market is in an uptrend. We are expecting a bullish movement. So during this time, during the New York session, in the morning time of New York session, you see that there were a lot of rejections happening at this particular point, unable to take out this particular level. Rejections are just happening around this point. Is an indication. It's an indication in the market. Then what happened? At exactly 7 o'clock New York session, after the manipulation, boom, NFP was released. And this is the movement. I took this NFP trade, but not in this particular pair. I took the trade in Euro USD. Euro USD. And this is exactly how it's supposed to be. This is exactly how it's supposed to be. And that is how we trade. So the next pair that I'm going to analyze right now is gold. Now let's talk about gold. This is gold market. This is gold market. Now, first of all, I want us to go to daily time frame and see what gold is doing from daily time frame. As a day trader, you always start your day from daily time frame as a day trader. Now, looking at gold, it is quite obvious, very obvious, that gold is in a bullish direction. Okay, the general trend for gold is bullish, and what gold is doing at this particular moment is correction. Okay, coming back onto this particular trend line. Okay, that is exactly what gold was doing. Now, we have confirmed that the direction of market for gold is uptrend and it is doing retracement, which we are expecting it to return on this particular trend line. That is the first thing you need to have in mind. And then let me kind of expand and see how the daily time frame looks like. Now, I want you to take note of something here about gold. If you look at this particular point in the market is ranging. At this particular point, this is another block. Okay, is another block here. The last bearish candle that was formed, or you can take this one, or you can take this one. Okay, before this movement, and then market returned onto this particular order block, got rejected, moved up to this particular order block here. Now, if you look at this point, there were a lot of candles here with rejections. But which one would you consider as your order block? Now, if you look at this particular one, this is the last bearish candle, but this one created the impulsive movement that pushed the market down. Okay, so this is your order block. Okay, and then market returned on it and wasn't able to take it out, and then traded down, taking out this low. Okay, and still trading within this particular order block at this point. Now, I want you to take note. Last 2 weeks, gold has been ranging at this point. If you look at the bodies of all the candles at this point, you can see that all the bodies of these candles closed inside this range. And if you look at the top side, okay, you can see that all the bodies closed inside this range with a small wick that cuts the top side. And then if you look at the downside, you can see that all the bodies also close inside the range with these 2 wicks here. Okay, you can see. Now, a lot of traders expected gold to be bullish this particular week that just finished. A lot of traders expected NFP to be bullish on gold. I had the same thought, but when I checked, I didn't trade gold yesterday, because when I checked gold, I can see that it is trading at a key zone. It is trading within this order block and a key zone in the market, but still the market is yet, okay, the chart is yet to touch this particular trend line. So it is one of the reasons why I didn't trade gold yesterday for NFP. Some people asked me, what are you expecting from gold? I told them that I don't know what I'm expecting from gold. I don't have any information about gold because gold is not showing me anything. Okay, so we are going to go into 4 hours time frame and see what happened within this range and how the market finally decided to go down instead of going up as many traders expected it to be this particular week that just finished. So let's go down to 4 hours time frame. Now this is 4 hours time frame on gold. What do you see here? This is the range. This is the range I was telling you about. If you can see, everything we're just closing inside this range. Okay? Everything was just closing inside this range. But this is the temptation. This is the temptation. This is what made many people believe that gold will be bearish, that gold will be bullish. Why? Look at this. Gold broke this structure downwards. Okay, gold is ranging. Okay, and at this point, it broke the structure downwards. Remember, it is trading in another block. Okay, and it broke this particular structure downwards, returned, and came down again, and traded into this particular support line that I showed you from daily time frame. Okay, and then it came up, took out this high, which is a break of structure. So everything was just aligning. Okay, everything was just aligned to show you that the market wants to go up. But what many traders failed to understand is this particular wick that was created here. Now, when this particular trade, when this particular candle was produced, it moved up to this level, took out this particular high. It means buyers wanted to continue going up, and then sellers pushed it down and it closed at this level. That is why I always tell traders, it is not about drawing perfect lines on your chart, drawing change of structure, drawing support and resistance level, drawing perfect lines. If it is about drawing perfect lines, all the perfect lines that I drew here supposed to show me that the market has to continue going up. But what happened? Gold did the opposite. You need to take note of what buyers and sellers are doing in the market. That is the main thing you need to do as a trader, not drawing lines. Drawing lines is good, okay? Drawing lines is good because it try to help you understand maybe levels, but it is not the main thing. Look at this candle, this bullish candle that was formed here. This bullish candle moved up. Buyers wanted to continue going up, but the sellers said, no, you can't continue going up. They pushed it down and it closed at this level. Now, looking at this level where it closed, taking it up to this point, you can see that it is still within this range, which means it hasn't broken this range upwards. Okay, then it stopped at this particular, it closed within this particular order block, because all these candles that are seen here formed this order block, formed another block here. So it closed within it, and then it pushed down up to this point. Okay, then returned up. Now this is where you need to take note. If gold really wanted to continue going up, it wouldn't have stopped at this particular order block, because this bullish candle with this rejection is the last bullish candle that was formed before this movement that came here, which makes it another block, and it has a long wick of rejection, and then market returned to it and respected it. So many traders didn't take into consideration this. Many traders didn't take this into consideration. And that is why many people thought that gold will be bearish, gold will be bullish, and it turned out to be bearish. Now, when it traded into this particular point, it got rejected. What does it mean? It means that gold doesn't want to go up. Then it pushed down up to this level. If you go to 4 hours time frame, if you go to not 4 hours time frame, if you go to daily time frame, you see that there is another block here. There is a small other block here, And there is another other block here from this 4 hours time frame. Now gold traded into it, and then on Thursday, what happened on Thursday? On Thursday, gold moved up, rallied up again, and traded up to this point. This particular order block, the last bullish candle that was formed before this movement, gold traded up to it and stopped again. It stopped again. Are you seeing that? Now, this is where I confirmed that gold is not going to, like, I don't know, news can give anything, okay, but this is what convinced me that gold is not going to be bullish in this NFP. Okay, so when some of my friends and some of my students were asking me, Kingsley, what do you expect from gold today being Friday and NFP? I told them that I don't know. I don't know what I'm expecting from gold, because everything that I'm seeing from gold, there is no indication that the market wants to continue bullish. You understand? So when it reached here, got rejected, returned, took out this low, returned, but it is yet to take out this particular low. Okay, it returned again, traded up, closed just at this particular order block, and wasn't able to take it out, and created this small rejection from it. That is where I know. That is when I know that gold is not going anywhere bullish, and it has not finished this downtrend. Okay, this downtrend movement. So, what happened on Friday? NFP. On Friday, NFP could. Okay, now let me just kind of draw something here. This will be very clear in hourly time frame. Okay, I will soon show you the hourly time frame. Now, this particular order block here, this is the last bullish candle before this small movement that traded up to this point. Now, what happened? Market respected it again. Look at this. So market respected it again, and then boom, the NFP happened. Now, if you can see, when the candle, this long candle from NFP touched this particular order block, it got rejected and then keep moving down to take out this low. So I'm going to go down to hourly time frame, and you are going to see exactly the time that all these reactions happened, and why you should be careful the time that you trade in the market. Okay, let's go to hourly time frame. This is hourly time frame. Now, okay. Now, looking at this point, when gold broke this particular structure and traded down up to this other block, up to this support level that I showed you from daily time frame, it came back and took out this high. This is break of structure. Normal, it is a break of structure, to be honest. And then it traded up to this point, was rejected, and closed within that other block that I told you, and then traded down, took out this particular liquidity here, traded into this particular point. Okay, many people expected that gold would respect this order block from 1 hour time frame here, so but it didn't. If you didn't analyze the market the way I just did it from 4 hours time frame, you would have made the same mistakes. Okay, now when the market traded back into this level, at what time did this happen? So everything is all about candle manipulation and distribution. So when the market opened here, accumulation happened. Accumulation. And then look at this. This is exactly now at this point, this is New York. This is a London session, 7 o'clock London session. 7 o'clock London session. Now at 7 o'clock London session, the market traded into this other block. Now that is why I always say London session is a very dangerous session. And whatever you do within London session, you should be expecting the manipulation of the candle that will be formed that day during London session. So at London session, the manipulation happened. Okay, and at exactly 7 o'clock, 8 o'clock New York session, then this movement happened. Okay, and the candle closed like this. And then the next day, the market traded up to this particular small order block from daily time frame, from hourly time frame, the small tiny order block here. Okay, so now when the market traded into this order block, many traders expected it to be bullish, just the way I explained, but it was the opposite. It was the opposite because on Thursday, market traded back into this particular order block. Had it been, okay, had it been that market traded above this level, had it been that market traded above this particular level and this particular level on Thursday, that is 2 days ago, I would have expected the NFP that happened on Friday, that is yesterday, to be bullish on gold. But instead, it got rejected at this point and then traded here. Then boom, it happened. It happened. That is it. That is how NFP happened on gold. At exactly 7 o'clock, 8 o'clock, 7 o'clock, 8 o'clock New York session, it happened. Bam. And that is it. So, as a trader, you must look deeper into the chart, not just the lines that you are drawing on the chart. You must look deeper into what the sellers and the buyers are doing, what the candles are telling you, what stories are the candles saying. Every candle that prints on a chart, more especially daily time frame and 4 hours time frame and even weekly time frame, has more powerful message to give you as a trader than everything all the noise that you see from 30 minutes, 15 minutes, and 5 minutes. So that is why when you confirm what the sellers and buyers are actually doing from daily time frame and 4 hours time frame, at least go down to hourly time frame as a trader, decide what is going on with other blocks, fair value gaps, and everything, and then go to 15 minutes. Whatever you are doing in 15 minutes is just to enter trade. You don't do any analysis on 15 minutes. On 15 minutes, 5 minutes, what you do there is just to know the exact time to enter the trade and exact place to place the stop loss in order not to take a lot of losses or in order not to be stopped very quick or something like that. That is how you trade as a day trader. Okay, now having said all about gold, then let's look at JBP USD. If you have if you have any chart, if you have any particular chart that you want us to analyze, just let me know. Okay, you can just type the name of the chart you want us to analyze, and I will do so. Okay, chart, the name of chart, right. Just write it down. Write in comment section a particular pair that you want us to analyze, and I will do so. But for now, let's analyze what happened with JBP USD. So now, before we talk about JBP USD, there is one thing you need to understand. There's one thing you need to understand. JBP USD always go in opposite direction to dollar index. But in most cases, it does not go exactly as Euro USD. Sometimes it has some differences between Euro USD. So anytime you are trying to compare, do correlation between Euro USD and anytime you want to do correlation between Euro USD, JBP USD, and dollar index, you need to be careful because JBP USD do not exactly follow the opposite correlation of a dollar index, not in exact way like Euro USD. So that being said, let's analyze the chart starting from daily time frame. Now, on daily time frame, this is how Euro USD looks like. On daily time frame. So our major concern is what actually happened here. What actually happened here last week. We don't want to discuss much into everything that's happened, but generally, Euro USD is in an uptrend. Okay, generally, and at this particular point, you can see that the market is trading at this level. From weekly time frame, this is another block, and here it is more like a support, like resistance level and support level. Okay, that being said, let's concentrate on what we have today, which is what happened here. Now, looking at this point, looking at this point, we were expecting the market, when the market traded into this particular order block here, the last bearish candle before this movement, this particular order block here, and then within it you have a fair value gap. When the market traded into it and had all this rejection here and decided to move down, we're expecting it to return to this level, or deeper into this level. That is expectation. So what happened? When it returned here at this level, it traded back, returned to this level. This is like a support zone. Okay. And then it's like a support zone which turned to resistance level that pushed it back down. And I'm expecting it to return here before it continues upwards. So what happened? Let's go to 4 hours time frame and see exactly what happened with this particular pair. Now, okay. So, and so in the life. Mhm. Okay. Thank you guys for your time. We're going to end it here and see you guys next week. Tomorrow, I will be at this same time. I will be analyzing what I'm expecting next week from all these pairs and what we should be expecting from next week. The instruments I will be trading